One of my favorite speakers, good friend of mine, Peter Schultz. He is up next. And Peter is is with Cashflow Heaven Publishing, and he's been showing self-directed investors how to trade successfully since 1996. He's nationally known speaker on options trading. Now, Peter is the founder of Cashflow Heaven Publishing with the primary goal of helping individual investors achieve a better lifestyle through trading strategies proven to produce exceptional and consistent returns. I have been, once again, had the pleasure of working for Peter for years, and this is his mission in life. We are delighted to have him here. Peter, how are you doing, my friend?
I'm doing fantastic, Raleigh, and it's really good to see you, Pat, Nikki, Cam. Good to see all you guys. Look, man, if you're locked up and because of COVID, you can't go outside, why don't you just make a few $1,000 while you're sitting around in your pajamas? I mean, I'm just saying, in between the bowls of ice cream and the binge Netflix, just a few thousand here and there just to put a little bounce in your step. Hey, you can spend it all on Amazon if you want. They deliver right to your door with those little gloves on, so everything's just nice and... How does that sound? I don't know.
Peter, you had me at hello.
The other thing is, everybody has all these theories about making money, and I think it should be fun and exciting and interesting. And I'm always amazed at books on finance where you have to drive a nail through the palm of your hand just to stay awake, through the first page. I mean, it shouldn't be that way. And, sex education and financial education should be the two most exciting topics on the planet. And I'm amazed that people make them boring. I go, that's a special gift. I mean, how did you manage to do that? That's incredible. I never want to have sex again. I think I'll take a nap. Thank you very much.
Remind me to keep the hammers and nails away from you.
Now I want a nap.
All right, my friend. Well, Peter, the floor is yours. If you can share your screen, you've got an hour, my friend. We're looking very much forward to your presentation.
Thank you, Raleigh. You're very kind, and let's get started. And so let's take a look at these two gals here. And the market has been a little crazy going into the election. And, the last speaker, I got a huge kick out of him because he does the same thing that I've been doing for 20 years. And those are bread and butter trades, selling spreads. Selling spreads is fantastic because the odds are so much in your favor. And then a volatile market comes along where it's really crazy. It's going up, it's going down, it's going sideways. And all of a sudden that trend isn't so easy to identify. And if you're not careful, you can end up like this wonderful gal here on the left side of your screen that looks like she's about to lose it completely. And so the whole point of this presentation is how to go from being really scared of volatility and having it mess you up and having it overrun your trades and having you lose money to go to just totally enjoying it and making money. So let's get going and maybe we can learn some things. So once again, my name is Peter Schultz. I'm the founder of Cashflow Heaven Publishing. We have a lot of different ways to make money. The winning secret is the selling credit spreads, and kind of the secret is being a seller instead of a buyer with options. All the really smart options traders that make a lot of money in the market, they eventually get that figured out. For me, it took a while, but I'm glad I did. The second strategy we teach is the greatest option strategy on earth. This one got me retired back in the late 90s. In a market kind of like the one we're in right now, it's a fantastic way to trade. And when you investigate that, you'll see why. And what we're going to talk about right here today is a new strategy that we just came up with called Fearless Profits. And the fourth strategy that we teach is 1,000% returns. And that is little micro caps, like buying some of these stocks for 15 or 20 cents and having them in some cases go to $1, $2, $3. And some of our subscribers have turned into millionaires using that strategy. And it's actually done me a lot of good also. So we have 4 different really great clubs in our golf bag here. And the one that we're going to talk about right now that's super appropriate for volatile markets, like the one we're in, is Fearless Profits. So the markets were crazy leading up to the election and immediately afterward. And I had a bunch of credit spreads on as always, and I'll be honest with you, I got killed on them. You know, if you get overrun on those things, or if they gap past your strikes, you can lose a lot of money quick. And you don't have to lose too many of those before you start scratching your head going, you know, maybe I'm doing something wrong here. Maybe this isn't the appropriate strategy for this market. So I made an important discovery on how to trade these volatile markets fearlessly and for massive profits. And that's what we're going to take a look at today. And this strategy really is cool. So the three biggest questions with trading volatility are, which direction is the darn thing going to go? How to stack the deck in your favor? And what happens if you're wrong? And so let's just talk about direction for a minute. I don't know if you've ever done this. I've been trading for, options trading over 25 years now, and, you know, stocks way before that. So with options, they give you all this leverage, which is super, super exciting because you can make a lot of money if you're right. So there would be a situation where there was going to be an FOMC meeting, you know, the Fed was coming out with some news, or maybe an individual stock was announcing earnings, or like this election, and you form a really strong opinion on which way the market's going to go, or this individual stock. So you go, you know what, I live and breathe Apple. I know all about Apple. You know, I'm at their stores all the time. I know they're going to kill their earnings. And what do you know? That you buy a whole bunch of call options. You spend a bunch of money. You know, you're already picking out your Mercedes-Benz. This is going to be so incredible. And they come out with earnings. And you know what? You're right. They just killed it. You know, they knocked it out of the park. Another record quarter. Absolutely incredible. And the stock drops. And why did it drop? Because there was some whisper number out there that they didn't beat, or people had higher expectations for earnings than what actually happened. You know, whatever it was. And the stock goes down. And, you know, you're mumbling to anybody that'll listen for the next week and a half. You know, I was right. You know, I was right, except, you know, you lost all your money. So you do that a few times and you start getting really gun shy. You know, you feel like you're playing with a buzzsaw and you want to keep all your fingers on your hands. So, like, what do you do? What do you do? So the number one solution is the traditional options approach to this problem is to put on a strangle or a straddle. And if you're an options trader, you already know what these are. But just real quickly, a straddle is where you buy a call and a put at the same strike price, you know, on the same underline. So with Apple, you're going, well, last time I really got burned on that. So I'm going to buy calls and puts at the same strike. So I'm covered in both directions. And then a strangle is where you're buying calls and puts at different strike prices. So, you know, you say, well, I know this thing's going to move at least $20. So I'm going to buy my strangle, you know, $5 apart or $10 apart. So I spend less money. So those are the two traditional approaches. Okay, I'll tell you a big problem with those approaches. The problem is that makes your costs so high. So we're down here in the gold part here. It's hard to overcome those costs outside of a truly outrageous move in the stock, which is rare. So I'll tell you a couple things about options. So when there's volatility, as particularly when there's known volatility, like an earnings announcement or a presidential election, the options get super, super juiced. And what that means is the time value of the option gets super, super expensive. And so you're paying through the nose and you're buying a call and a put. So your costs are like, you know, out of this world. They're super, super high. And you go into that trade knowing that you're going to lose completely on one side. You know, you've got to make up all your costs on the side where the stock actually goes. And here's another problem with this is, so all of that volatility premium that gets priced in there, almost the moment after the event happens, it's like air being let out of a balloon. It just deflates. So those option prices come way, way, way down. So, I mean, if you traded and you've traded volatility, you know that this volatility collapse is a real problem. It's a real situation. It makes it really hard for you to make money. The other thing is this outrageous, astronomical, huge move that you're anticipating, a lot of the time doesn't happen. So you kind of have a double whammy working against you here. You've got volatility collapse right after the event, and you've got an event that a lot of the time isn't nearly as big. I mean, the underlying doesn't move nearly as much as you need it to really, make your money back, let alone make a profit. So, here's the thing. As a credit spread trader, I'm sitting there and I'm over on the way conservative side of options, just making money every week. But I'm always looking at volatility, and I look at these big moves, some of the biotechs make when their drug gets approved or doesn't get approved, or, like what we've just seen in the last few weeks with the overall market. And I go, gosh, wouldn't it be nice to be able to trade that volatility without having your pants forcibly removed, when you're wrong, or, some terrible, awful thing happened to you. Wouldn't it be nice to trade it with some kind of a degree of confidence, or perhaps even fearlessly? So problem number 2 is we need an edge. And, as we've seen, that's kind of difficult. So without a both directions coverage, you don't have an edge, which knocks out our second question. So that we've got no edge. And number three is, what happens when you're wrong? What happens to your trade? Well, it turns out we can lose quite a lot if the one-sided move isn't big enough to cover our cost on both sides. And problem is, it almost never is. Now, I don't know if I've ever looked exactly like this lady right here, for one thing, because I'm a guy, but I'll tell you what, I've sure felt like her. She looks right now. I mean, I've just been so bummed when I see these trades not work out, especially when you had it all planned out. So what's our solution? And the solution, I think you're going to like this. It's the fearless strangle. So what if you could get your costs down, which is really key? The less you have invested, the less you can lose, the bigger chance you have of making money. When you do make money, your profits are bigger. So what if you could get your costs down and still be covered in both directions? What if we could do that? Wouldn't that be kind of a cool trick? Okay, so what the heck is a fearless strangle, and how do we set it up? So this is it. So this is an actual trade that I put out to my subscribers. And this is very recent. This is very relevant. This is when we put on the trade. So what we're doing, and try and follow along with me here, and I'm gonna get my little marquee pen here so I can kind of show you what's happening. So what we want to do is so here's the underline right here, okay? And regardless of what you know now, right then at that point in time, which looks like about October 19th, if we look down here at the timeline on the bottom, you don't really know which way it's going to go. And you can sit here and go, well, Peter, we have a lower low, and, it seems to be trending this way. And so, I think it's going to go down. I think that's great. I think it's going to go down too. But here's the thing about technical analysis and everything else. The market is nothing if not full of surprises. Somebody burps the next day at the Federal Reserve and the thing, goes straight up, or, some news comes out about COVID, whatever, and it goes straight down. You really don't know. You can't tell. And one of the things we don't want to do is lose our money, but we want to set ourselves up to make a lot of money. So here's what we're going to do. We're going to buy the 355 calls. Now this is on the SPY. And as you can see, the thing is 347.50 right over here on the right. We buy the 355 calls. We're also going to buy the 340 puts. Okay, right now, what we just put on is a standard strangle. That would be a strangle. And that will cost us, if you add 433, cost of this one, to 563, the cost of that one, we're going to come up with 996, right? So we're going to do something kind of interesting here. And this first one was just an experiment. I just kind of want to see how it would go. We go $10 out of the money, 10 bucks, and we sell a 365 for 62 cents. We go $10 out of the money down here, and we sell a 330 for $1.72. But here's the interesting thing, and here's what kind of makes this a little fascinating, is because the SPY has so many different expirations. We are selling out of the money, and we're selling an expiration that happens before the big volatility event. So the big volatility event, of course, is the election on November 3rd, and this expires, and so that's on a Tuesday, and this expires on a Monday. Now, the options that we're buying go all the way out to Friday, November 6th. You can see that right here. So we have some extra time here, plus these are out of the money. But what's interesting about this is because the market had been kind of volatile, and you can see how crazy it's been, all the options are juiced. So even the ones that are expiring before the election are juiced. And so we're getting, we're way out of the money here, down here on this 330, and we're still getting $1.72. So you add our two credits together, and our new cost basis is $762 instead of $996. So that's a 23% difference. So that's kind of sweet. That's kind of neat. And there's a lot of different scenarios. We don't know what's going to happen here. So there's a lot of different things that can go on. Oh, let's see. Let's go forward. Okay. So here we're set up. This shows what we sold, what we bought. This is the call side. This is the put side. And this is right off of our website. I kind of show you. It shows when the expiration dates are. See, these expire the day before the election. These expire 4 days after the election, 3 days after the election. Net cost, and our total cost on this whole thing, is $480. Okay, let's go on. So let's see what happened. So how did it play out? So gosh, guess what? Your technical analysis was correct. And from the time we put this on, this thing not only went down, but my gosh, it just absolutely crashed. Now, I can tell you from experience that if you're putting on credit spreads, if you're putting on put spreads in this, you would have just been killed. Where they work best, where credit spreads work best, is just an evenly, strongly trending market that you don't have to worry about. But as soon as things get kind of jiggy, as soon as they get kind of hard to figure out and you don't know what's going to happen from one day to the next, this is a fantastic strategy. So this thing absolutely plunged. And right down here, in this area right here, so this is actually before the election. This is before the election. So there's a $10 difference, right, between these two. So they're going to be worth at least $10. Because we got the 340 strike and the 330, there's a $10 intrinsic difference between those two. And we're actually below it. Down here for 3 days, we're actually below our lower put. But here's what's interesting, is the one that we bought, this one up here, has more time on it than this one down here. So this is worth more than $10. It was actually worth $12.50. So just selling this right down here before the election, anywhere in here, you have 3 days to do it. You would have got around $12.50, between 12 and 12, actually almost 13. And so our initial investment is $763 for everything, for both sides. And we could have sold out for $12.50 minus the $763 equals $487, or a 63% profit on the downside. And then we still would have the upside. Look what the upside did. It just absolutely launched right after the election. This is the kind of volatility that is just so cool. This is so amazing. So this is, if you read the chapter in the book that Raleigh sent out, this is all outlined. This is the actual trade. And this is our very first one. Kind of just dream this up, kind of lay awake at night thinking about different option strategies. And this seemed just so perfect. And so here's what happened, though. And this is where you can get some human error in here. And this is where you want to have some good judgment and, more importantly, some good rules around these trades, is I didn't sell in here. We had this beautiful profit that you see outlined over here. I didn't sell. Why? Because I wanted it to go past expiration. So we didn't have to worry about buying this back. And I figured the day after the election, there was going to be, maybe there would be allegations of voter fraud. Maybe we would have some kind of a tie. Maybe half of the country would be really mad at the election results. And I just thought, you know what? This thing's going to plunge. And I wanted this open put position to really rack up the gains. In other words, I got a little bit greedy. Could have taken a profit right here, didn't take it. And so look what happened. Right afterward, the thing not only went up, but it gapped up every single day. So the day after the election, it gaps up. And actually, this is like the day of the election, it gaps up again the next day, gaps up again the next day. We had 3 huge days. Now it's up at 350. And what do you think this put spread's worth down here, especially with just 3 days of time left? Let's take a look. So we had a big profit, but let it slip away. And here's why. We're seeing it right here. It's because of this move right here, making this put spread almost worthless. So how did we turn a beautiful profit into a loss? Simple. Greed. Look at this. So we had a $7.80 total cost. Could have sold out for $12.50. Instead, we bought back, or let's see, we sold out once the thing had gapped up for a couple of days and we realized it wasn't coming down. We sold for $2.50. We also bought back on the last day on that one Friday's expiration just to not get a sign. Turns out we went out, but I bought it back anyway. So anyway, we had a $1.69 loss there. And then let me just show you here. The market went up, but look at our strikes here. It didn't go up high enough. So this is expiration. This is where it ended up the day before expiration. Now, the very next Monday, this past Monday of this week, yeah, it shot up. We would have made a bunch of money, but it expired basically worthless. So this is like, basically what I'm trying to say is I really screwed up and I turned a beautiful trade and a beautiful strategy into a loss. So this is true confessions. It turns out that I'm human and I make mistakes, but keep in mind that was our first trade. That's the first time we ever did this. And actually there was nothing wrong with the strategy. The strategy worked beautifully. So how to do it right? What should we do? So just a few days after that trade, I got to thinking about it, and I got to thinking about ways, and before that one ever went wrong. I mean, like I say, we could have made a fortune on that one, and we just didn't. So before that one ever went wrong, I started thinking, well, how could you improve this thing? What could you do to make it better? And I think we've turned it out okay. So the solution is number one, and we just saw this. Well, number two is take your profits when you've got them. And that was the problem we had on that last one. But buy longer-term legs, longer-term bought legs. So like I say, we had that last one on the SPY expiring that Friday, just 3 days after the election. What if we had bought just one more week at time? You know, we would have made out, we would have done well. Even though we screwed up on the bottom side, we still would have made money if we would have bought just one more week. So here's the trade and the strategy set up the right way. And this is what we're doing now. So take a look at this. This is really cool. So I did this just a few days later. You can see the trade was initiated, well, maybe just a day later. And so this is on the Qs. So I love the Qs because, you know, that's the NASDAQ 100, and they actually move pretty well. You know, they're pretty good movers. So this is the actual write-up. If the QQQ is going to crash, it will likely be before the election or immediately afterward. But a big jump higher could last a while. This trade is designed to take advantage of that. So my theory always was on the election is that once it gets settled, there'll be such a relief, no matter who wins, that the market's going to skyrocket. And both sides of the aisle, both Democrats and Republicans, are all for a stimulus. You know, I don't know where this fiscal conservative thing comes in because, you know, everybody wants to spend more money. I mean, who wants to compete with Santa Claus, right? So we just want to dump all this money in the economy to kind of help things out during COVID. Well, a huge amount of that money finds its way into the stock market and into real estate assets. That's why we've seen so much asset inflation over the last year or two. So how are we going to play this? So what we did is we sold a $300 call up here to take in money. We bought, and this is the key right here, we bought a 290 call. But look how much time we bought. We bought from here basically October 19th, all the way to the end of November. God, that's a terrible line. But right here, the end of November. So we have a tremendous amount of time there. On the put side, our theory is, and you can see in the commentary up here, the theory is that we really need the puts only before the election, maybe immediately after the election. So this is the Friday after the election. And this is actually the Friday before the election is where we sell our puts. So we bought the 280s. So there's only 10 points apart here on almost a $300 underline. So we're going to get some movement. And obviously the worst thing that could happen is for this thing just to go sideways and not go anywhere for the entire duration. But I haven't seen that happen in the dullest markets in the summertime, let alone right before a hotly contested presidential election. So we're pretty confident we're going to get some movement here. So how did this turn out? So, you can see the difference in how this is structured. The main thing is we have this really nice 290 call that goes out for a long time, 6 weeks of time for this thing to move. So let's see what the heck happens. Oh, by the way, our total cost on both of these is $13.20. It's a lot more than our SPY trade because, for one thing, the Qs are more expensive than the SPY, so the options are going to be more money. But also, we're buying more time. So you kind of get what you pay for. So we have a better chance of winning, but we've got a higher cost to overcome. So our total cost is $13.20. So what happened on this? Well, look, the same thing happened on the market. We put the trade on here. Don't really know which way it's going to go, but it just freaking plunges after that. And this is what we want. We want this kind of volatility. We want craziness. We want it to just go, straight down. So or straight up. So here's the difference. And this is what made all the difference is this time I said, you know what? I don't care. This thing could plunge after the election. I don't know what's going to happen, but I'm taking my money right here and now. And we did it before the election. We did it while this 270 put was still in force. We didn't wait until afterwards. We just sold out. And what we sold for is $11.88. So once again, there's only a $10 difference between these two strikes, but we're getting more than that difference because this bought put has more time on it than the sold put, so it's more valuable. So we get $11.88. We subtract that from our cost basis of $13.20, and our new cost basis in the trade is $1.32. So we have $1.32 invested right after this Friday. So our sold call disappeared. It just went quietly into the night. It just expired. It's nothing. And we now own the 290 calls out until the end of November for $1.32. Now, this is a position you want to be in. And look what the market did. So remember those gaps up on the SPY? So we're getting similar, even bigger gaps on because it's tax. It gapped up here, gapped up again after the election, went sideways for just one day, went straight up almost to 300, backed way off. I mean, this is volatility extraordinaire. Gapped down the next day, and then shot all the way back up to our bot strike. So we're right at the money. And then this is today. This is just this morning. I mean, just when I opened it up. See this? We're actually above our bot strike. We have such a tiny cost basis in the thing, and we still have pretty good time. We got like at least 2 weeks here. We got some time on this thing. So what's it worth? Well, here's the deal. So once again, you can see our total cost. You can see the cost of each side, and we can see what we got on the sale. And that's just kind of showing you what's on the site for keeping track of this thing. So here's my account. So here's the position, right? It shows it. And this is, like we talked about, this is the 290 call. We're in this thing $1.32. And look at this. Here's the bid and the ask. That's this morning. As the QQQs rise, and I'm anticipating that they're going to through the end of the month, just as things settle down, as there's more the good news about COVID vaccines as we're going into the big fourth quarter holiday shopping season. I mean, there's just all these reasons. This is one of the most bullish times of the year that there is. I mean, the time period here is just, this is a great time to be long the market. And we've got these fantastic calls, and I got a bunch of them. You can afford to get a bunch of them when you get your cost basis down a little bit. And so at $1.32, we got a triple on this, something like that already. I anticipate this is going to go over $10 by the end of the month, probably well over $10. Start figuring that out based on a $1.32 investment, and it gets pretty exciting. But if you want to be more conservative and just say that, divide it by our original investment, which, by the way, we don't have that at risk anymore, right? So it's not really accurate. But even at the most conservative, it's a 40% return. But if we go, well, I'm just going to figure this out on the calculator right now. So if we go, let's go back to that, call it, I don't know, 664. So worth 664 right now minus $1.32 equals 532 divided by $1.32. Holy moly, that's over a 400% profit. And I think, like I said, I think this is going to keep on going. I think we're going to go up to $300 or on the Qs, maybe a little bit higher. We got a lot of time for that to happen. And I think we're going to sell these for over $10 and with just practically no risk. If you're worried about a reversal, you can always put in a stop to preserve some of your capital. I mean, we could put in a stop at $2 on the option or $3 on the option so that we're sure to make money. But the point is at this point in time, you don't really have any more risk, and you certainly don't have any fear and trepidation. And the market can just go haywire, and you're in pretty good shape. So I know this may seem kind of complicated, especially if you're not an options trader, if you're just used to buying straight puts or calls. But this really is fun. I mean, I think the cool thing about the markets is trying to outfox them, right? It seems like when you're trading sometimes, it's like they're all trying to take your money. You zig and you lose money, you zag and you lose money, and the market's always doing what you least expect it. What I like about this is if there's any volatility at all, and you can play with these legs, you can make them tighter, you can make them looser, you can make them further apart, you can play with the expirations. The cool thing about options is there's so many neat things that you can do to really get creative and get yourself into a position where you're just going, hey, come hell or high water, I think I'm going to do pretty well. So like I say, the only thing that could have killed us on this is we put this trade on right about in here, and if it would have just done this, the whole time. And is that really going to happen when you have this volatility event? And that's true of an earnings announcement too. I mean, the stock's really not going to move at all. Of course it is. So what have we learned? Let's just go through this real quick. We're going to bet both ways, but reduce your cost basis. That's so important. You reduce your risk, and if you are profitable, you can make more money when you have less invested. So number two, when you have a big profit, take it. That's the mistake I made on that SPY trade. I mean, we had a big profit. Gosh, don't get greedy. Just take the money and run. And number three, buy longer legs so you can run to bigger profits. That's a big difference between the SPY trade and the Q trade. Is on the Q trade, we have those calls all the way out to the end of November that are still making us money, and we'll probably end up racking up just a beautiful profit there. So here it is, just kind of summarized on a list. If you're taking notes, I want to put this all on one page for you. Bet both ways, but reduce your cost basis. When you have a big profit, take it. Buy longer dated legs so you can run to bigger profits, and follow all three, and you stack the probabilities overwhelmingly in your favor. And that's what we want to do. That was number 2 on our list of things that we wanted to do, is stack the deck, give us an edge. So I don't know if you want more, but I'll tell you what, we're doing such exciting things. People say, why do you do this? If you're so good at this and you make so much money, why don't you just trade at home? And why do you even have a service? Why do you have a business? Well, it's awful darn fun to get emails from people that are making money. And we got a lot of ways to make money. So now we've got, we used to just have the winning secret, but now we've got fearless profits. That's what you just saw. That's what we just talked about. Good for any volatile market. Now, keep in mind that, individual stocks are guaranteed to get kind of volatile 4 times a year, and that's earnings. But there's other times as well. If there's big things going on, if there's big global events that you're worried about, Fearless Profits is a fantastic strategy. The winning secret, bread and butter trades, and that's just bringing those profits in week in and week out. They're very high probability. We sell way out of the money. We collect really nice. We're shooting for about a 25% return every 10 days. The greatest option strategy on earth, this one can make you an absolute fortune. If you have ever been a landlord or rented out properties, that income's pretty nice every month, but the problem is the renters. And I have income properties because I think it's really cool to be diversified, but I hate getting those phone calls that the dishwasher isn't working or something's making a funny noise or, it's leaking under the sink, and then I got to run around and try and figure out how to fix that problem. So the greatest option strategy on earth is like enjoying the rent without the renters. But the difference is this thing can really run to some serious profits. We don't typically do individual stocks. We can, but we usually do ETFs, baskets of things. The latest thing we did is KWeb. We did that 2 days ago. We've already got some big profits on it. Actually, we did it. We did it 2 days ago. It's already up. It's all the biggest tech stocks in China. Things going crazy. We've bought all the way out till May. And every time it gets overbought, we're going to sell against it and bring in some really nice income, reduce your cost basis. And then this one is the big millionaire maker right here. This is 1,000% returns. We got some deals going on that will blow your mind. We're getting in on stocks. We got in on one. This is 2 years ago. We're still holding it. Got in at 25 cents. Bought a whole bunch of shares. I got everybody kind of an inside deal on it. Stocks trading for around $2 to $2.50. So that's about 10 times on your return. That's your 1,000%. We're not close to being done. I think this is going to be a $100 stock in a year or two. You will not believe what they have coming down the pike. We've got about 8 of these companies in our portfolio. Some of them go bust. That's expected. That's venture capital. That's what we're doing. But the ones that make it can literally make you a millionaire. And we've actually done that in some cases already, and in my own case. So this is where incredible wealth is made. So we have 4 different strategies here. And for this, what we're doing right now, this is brand new. I've just created most of these. A lot of people don't even know we do these. These are fantastic strategies. And I'm going to include them all for the first time ever for one super low price, just for this format, just for what we're doing for Westmark. Like I said, we've never done this before. It's the best deal we'll ever see. I've got a complete program that talks, it gives unbelievable amounts of education in a fun way. I don't believe in boring people. I think learning how to make money should be really exciting and cool. So I put together a really fun educational package. I've got how to trade credit spreads for fun and profit. If you don't know how to do it, you're going to absolutely dig it. You can make money from anywhere. It's really passive. I show you how to put on automatic orders so you don't have to babysit your trades. Really fun, really cool. You get a 161-page downloadable ebook, 10-chapter video series. I just upgraded it, just redid all of them. They're really cool. We have really cool videos. We've got, archived webinars, video tutorials. You get everything for life. You get lifetime access for one low cost. And I've also got education that goes along with all our other strategies. So what you just saw, Fearless Profits. I've got a great 7-module package I just did on the greatest option strategy on earth. You get all this. I just want you to have the best of everything. And once again, these videos are not dry. They're not boring. They're not really long. I can get a lot of information across in a 5 or 6 minute video. So these are bite-sized pieces. They're easy to assimilate. I believe in keeping your interest. And so I think you're going to like the education. I think it's just really fun. I'm going to show you videos on how to set up automatic orders with our favorite broker, which, by the way, that's Thinkorswim, for spread trading and all of our other trading to trap profits, whether you have time to watch the markets or not. Last thing I want you to be is glued or chained to your computer. I want you to just make this easy. This is as much about lifestyle as it is making money. And so we want to use the millions of dollars that these brokers have put into their automatic platforms to really take advantage of them. And I have videos on that, on how to enter the orders. So if you're a little unsure on how to do that, boy, I just walk you right through it. This is my pride and joy. This comes out every Tuesday night. I give you 2 high probability trades every Tuesday night. A lot of really great commentary. I show you what you've seen our charts already. What's going to happen, what's likely to happen. I give you follow up. I give you commentary on the market. I give you ways to make a bad trade better. I really hold your hand. This is where we can make money together. I'm including the first month. After that, it's $97 a month, but you'd probably make an entire year's worth of the subscription in 1 or 2 trades. So don't worry about the monthly cost. I mean, the market is set up to pay for that, not you. So you get all this education. You get your first month, really comprehensive. I'm going to throw in an extra 10-module video course specifically on trading the weeklies, which is the best thing that's ever happened to options. They really started becoming prominent in 2012. Just ups our paydays. It accelerates our time decay. Does a bunch of really, really cool things for options traders. And then in addition, included in this package, I want to give you some one-on-one personal attention. So I've got a beautiful gal here, Deanna. She is fantastic. You're going to love her. And she's going to give you an orientation on how to get the most out of your subscription and out of your educational package. She's going to walk you around the site. This is you and her. And she can show you right on your computer, like what to click on, how to get access to our current plays, to our tutorials, to videos, everything that's on the site. We're not going to just turn you loose and hope you figure it out on your own. So this is a personal one-on-one orientation. It's not recorded. It's you and her. You make an appointment, and I'm telling you, you're going to love this gal. It takes about 40 minutes. Makes all the difference. And this is where we really differentiate ourselves from everybody else out here. This is Alicia. And unfortunately, I live in a college town, and they graduate a lot of bright people every year. She's really gorgeous, and she's very colorful. She's got a lot of tattoos, and I get a huge kick out of her. We become like really, really good buddies. But what I really respect is her brain. She graduated in the top of her class in finance. And she's our personal coach, one-on-one training. She makes people so god darn much money. People sign up for 8 sessions back to back to back to back because, she's bright. She knows the markets. She knows these strategies. I ask her about stuff. Whenever I come up with a new strategy like the one that I just showed you, I run it by her. She's fantastic. And I'm throwing in a 45-minute personal coaching session. This isn't how to navigate the site, or this isn't to tell you what a put or call is. This is designed to set you up to really make money. And no matter what your skill level is, Alicia will be right there with you. She's really down to earth. She's sharp. She's not going to talk down to you. You're actually going to fall in love with her by the end of your first session. So like I say, I have a lot of people that sign up for back-to-back sessions with her. And I want to include your first one. By the way, what we're charging for this whole package, everything, your first month subscription, all this individualized attention is about the price of just one 45-minute session with this gal right here. So you get everything. And like I say, we've never done this before. We're including more things than we ever have. Just a bunch of just really, really, really great information designed to make you money and have fun doing it. And the link here is westmarktrading.com/M11-secret. You've gotten that link from everyone else. Just go there. It's just to save you a little bit of mystery. You get everything included. I mean, I've sold this for $2,500 on cruise ships before and didn't have nearly this much content. And I'm including everything that you've just seen for $397, including your coaching session, including your orientation, including your first month subscription, everything. So that's the sales pitch. If you want to make some really good money, we can do it together. We can have a lot of fun doing it, and I'd absolutely love to have you on board. But we got about 9 minutes left. Let's take some questions. And Raleigh, I can't see him because I'm looking at my great big screen right now. Do you want to just read him to me?
Sure.
Any personal insults, anything about, my lineage, heritage, any of that's fine.
We filtered all that out. No, once again, Peter, tremendous presentation, and like so many of the speakers before you, comprehensive to the point that in many ways you cover the questions that come up during the presentation as you go through your presentation. So I think thing number one was that you covered a lot of ground and you answered a lot of questions. Number two, you absolutely met the benchmark of making this fun and interesting. You know, you set the bar high when you walked into this and you were saying, you know, learning education like this should be fun and interesting. It shouldn't be dry and boring.
Oh,
Certainly
gosh.
got great comments in around that. One of the questions that did come up here closer towards the end as people were thinking about the examples that you put up. And she says, you know, you're showing us a trade where you picked both a top and a bottom for the sale purchase of the options. How did you predict those would be the turning points in those directions?
Well, if you'll notice, gosh, I don't have any crystal ball. I mean, those are trades we put on when I had no idea which way the market was going to go. And, you know, you can look at a chart just like I can, and you can kind of, you know, say, well, that kind of looks like support and that kind of looks like resistance. But, you know, the markets blow past those all the time. I just wanted, basically what I wanted to do is, in looking at the chart, you saw the amount of volatility there. In other words, you kind of take a top and bottom of the chart.
Right.
And you go, can I pick strikes that I'm pretty sure if this thing goes haywire, it's going to overrun them? You know, because we want that market or that stock to run right past our strikes. That's where we make all of our money. So the thing with volatility for options traders is it kind of makes your mouth water because you're looking at all this potential profit, but at the same time you're going, well, God, I've done this before. You know, I reached into the mousetrap for the cheese and got my fingers snapped off, and that didn't feel very good. I don't want to do that again. So that's why. You know, people say, well, why do you put on all these different legs, you know, and why do you buy one and sell one and all that? That's I'm not just trying to make things complicated. No. I'm trying to make it so that we're going to kind of win just about no matter what happens. Well, that's kind of the goal.
That's you know, that was the key takeaway that I had, Peter, which was just fascinating. It's kind of like you're going into a market where you're not sure what that market is going to do. Once again, you use the election as the bench point. Here we are going into the third, what's going to happen here? And then you were hedged every which way from Sunday, you know, going into that. And so it did raise a couple of other questions that you addressed a little bit towards the end, but let me come back to it.
Sure, you bet.
You talk about the fact that it's important, hey, if you're making profits, take those profits, et cetera. So how much trade management really is required once you're into the trade, Peter?
Well, see, once you're in the trade, here's what's going to happen. You know, I can tell you all day long, oh, walk away, you know, have a, you know, glass of iced tea, you know, smell the flowers. But we're human beings, so we're going to go back and we're going to check our computer and we're going to look and, you know, how's it going? You know, what's going on? And you'll know. I mean, when it blows through a couple of your positions, you've got a big profit going, you know, just take it. Now, I just want to acknowledge that the day after, say on the Qs, we took our profit. It was really great. We got our cost basis super, super low, right, down to $1.32. Well, the day after the election, you know, the bottom could have dropped out. You know, I mean, I don't know if anybody's old enough to remember the hanging Chad incident back in, what was it back? Yeah, exactly. And, you know, the market just crashed for like 4 days after that. I thought, well, that could sure happen. And if that happened, and we already sold out of our puts, we would have left a lot of money on the table. But, you know, you got to be okay with that.
Yeah, you can't
go. Yeah. You know, look, you know, it's a fool's errand to sit around and go, oh, look what I could have made. Look what I could have made. You know, I used to do that when I started out. You're just torturing yourself.
Sure.
You know, if you have a big profit there, a really nice profit, and it's really looking really, really good. I mean, just, you know, take it, feel good about it. And if something, you know, I had one wise old guy once, all these rich old guys I used to listen to when I was young, you know, trying to learn something. He said, you know, you're never going to get the last dollar in anything. You know, he had sold some Mercedes Gullwing for some big money that he bought when he was like, you know, when he first made money. And I said, well, God, you know, those are going for $500,000 now or whatever. And he said, man, he was completely nonplussed. He goes, you'll never get the last dollar out of anything.
Right.
You know, so if the market's giving you, you know, providing a really nice profit, I mean, you just goes, thank you very much. I appreciate that. And just put it in your little piggy bank.
So from that perspective, it's interesting. I've got some thoughts about this. When it comes to that, Peter, are you an advocate of traders thinking about maybe what your financial objectives are for the week or for the month or something like that? And once you've reached that, be satisfied as opposed to trying to reach through that?
Well, I don't really do it that way. To me, that's kind of a backwards approach. I mean, I think
Okay.
the right approach is to let the market dictate. So like there's times like maybe in the summer we're not super active. We're putting on our little credit spreads. We're making our 25% every 10 days and that's good enough. But like right now, I have to say, in just looking at the market and looking at the setup that we have before us, I think things are going to skyrocket. And you heard it here first. I mean, I think the next 2-3 months is going to be awesome sauce for call buyers and for bulls. And we've got just all this kind of perfect storm lining up. We've had all these repressive aspects keeping the market down. I mean, the election's behind us. I don't know if Biden's going to win or not, but he's perceived as being more friendly to China. That's really bullish. I think this COVID thing is going to start going away, especially with the vaccine. And all that's going to happen is for some hope. I mean, we saw what happened Monday when Pfizer made their little announcement. So I think it's a really, really, really good time to be long. So we've come out with all these greatest option strategies on earth plays that, a 10 contract position could make you $50,000 in a couple of months. So I don't sit around and think about, well, how much do I want to make today or this week? I don't have those kind of goals. I say, is the market handing me a little pot of gold, a big pot of gold, or is there just too much risk to even get involved?
Sure.
So I kind of let the market tell me what to do. And if you do that and you're somewhat prudent, you'll do great. You'll do fine.
That's excellent, Peter. Well, once again, thank you so much for your time. And I think I'm going to kind of bridge your presentation with what we heard earlier from Scott Shaladay. That is that there's trillions of dollars of cash sitting on the sidelines at this point in time. And so to your point and his point is if the market really does start to turn around or whatnot, that money is going to come back into the market. It has the potential to fuel growth.
You're exactly right, Raleigh. And, everybody's always concerned about a meltdown. Start thinking about a melt up and what a melt up looks like. And I was around trading options in 1999. And there was this young gal that where I worked, we used to talk about going mountain biking together. She's a little cutie, she's 27 years old. And she bought some calls on Amazon in the summer of 1999, July of 1999. By January, that young 27-year-old gal was a millionaire.
Yeah.
And that only happens, like maybe once every 20 years or so. I think it's going to happen right now. I think it's going to happen in the next 2-3 months.
Okay, folks, you heard it here. Peter Schultz.
Hey, Raleigh, it's always a pleasure. Pat, I miss the daylights out of you. One of these days, you have to trust me enough to introduce me to your daughter. I know that's, been a really tough thing for you. So it's just great working with you guys. I love all of you, and I love what you're doing, so thank you.
Thank you so much, Peter. Appreciate your time today.
My pleasure.
Okay, folks, that was Peter Schultz with Cashflow Heaven Publishing. And once again, what he shared with us is his special offer for the Winning Secret Presidential Special, the complete access to the Winning Secret trading system, the Conquering the Volatile Markets with new Fearless Profit service, of course, the secret special that he has and the bonus to the greatest option strat. Everything basically that's core to what Cashflow Heavens does has been all bundled up into a package. He's supporting that with online support, a 45-minute mentoring, program. Everything is there that you need to get rocking and rolling with this. All you have to do is go to westmarktrading.com/M11-secret, and that will take you right there. So once again, we thank Peter for his time today. And now, at the top of the hour here, it's quiz time once again.
It is quiz time. All righty. This is how it works. You should be familiar with it by now. You can only win one time. You need to put the correct answer in chat or Q&A. Our moderators are watching both, and they inform us who was first with the complete answer. Give us about 24 hours to send those cards out. We sent everyone yesterday their cards, so you should have them. And Raleigh, what is our quiz? Ah. Who is the only president to hold a patent? The drummer, he loves it.
Oh, man.
That's all I know how to do.
Do we have a winner?
We do.
Okay, let me go ahead and stop the music. I'll just share a quick little story with you. I am a drummer, and I was drumming in high school, and we used to have these drumming contests, you know, side by side. How long could you play Wipeout before your arms fell off? It was like a rite of passage.
How did you stand up? How'd you hold up?
Oh, I
How'd
did
you
great.
hold up?
I did great.
I
Not
bet.
only did I last for a long time, but my timing was perfect.
Oh, my. Awesome.
Anyway, so we have a winner here.
We do. The winner is Rick Cardoso. Congratulations.
Good job. What's that answer? Abraham Lincoln, patent number 6469, in case you're wondering, issued on May 22nd, 1849, for the design of a floating dry dock.
Yeah, and it was just a little bit more on this. The whole idea here is he was trying to come up with something that could enable barges and things of that nature to be lifted up so that it could float over shoals and keep on going on its path. And so he got a patent for that. It was never put into practice, but he is the only U.S. president to hold a patent.